So last night, really the last like 24 hours, I mean, is that 6 candles? Yeah, the last 24 hours really has just been disgusting. Ooh, yuck. Now, if you guys were in my stream last week, if you guys see my videos or my posts on Twitter or anything like that, you guys know we've been tracking this for quite some time. That at the very least, we were bound to see these lows get swept. And I had marked this sort of $85,000 level here based off of this wick. And I told you guys last week that, truth be told, there was not a whole lot here, but it was one of the few things on sort of the lower time frames that I could kind of constitute as any sort of level that might have a wall of buyers. So interestingly enough, we have not only swept the 90K lows, but we are fastly approaching that $85,000 mark. So interesting stuff. I can't say that this was really unexpected. You know, we talked about this last week, but you have to be objective, you know, when you see clear shifts in the direction of the trend, when you have key reversals, right? We use our EMA cloud quite often. So naturally, it's just basic math. If the shorter term moving average, which is taking in less data, is well above longer term moving average that is taking in a lot more data, then clearly the shorter term price action is performing stronger. You're usually in a bullish trend. You'd like to see these EMAs serve as support, right? So we can just take our sort of election run and put it into context. So first we start with a clean break of your moving averages. You're going to get deviations because these are just, you know, simple. Well, these aren't simple. These are actually exponential, but simple in concept, right? But you look for the cloud of moving averages to act as support rather than acting as resistance. So you first look for the break above, then the hold, and then you create that same pattern. But what you see over here is first we have the 8 crossing below the 21, we have the 8 crossing below the 50, and most importantly we have the 21 crossing below the 50. So plenty of bearish crosses. The wicks here suggest a clean sell wall at around $106,000. And yeah, I mean, it's just textbook trend reversal. When you see something like this, right, you see that type of support being lost, you see the trend breaking down, and the inability to break back above the moving averages and reclaim some support. It's very clear where the market is headed. So we looked at that last week. Truth be told, I didn't expect this to take 2 daily candles, but sure, why not? Discounts tend to come when you don't when you don't expect it. Cool. Okay. So let's get back into this. Yeah, I mean, we talked about it last week. I don't really think that this is anything out of the ordinary for what we've seen so far in this cycle. This is how it goes. You tend to have a narrative that carries price action in one direction, and there's this interesting relationship, and I'll try to draw it out. We'll call it the narrative and the reality. 2 very important things to think about: the relationship between narrative and reality, and where price is along that journey. Let's look back at 2022. We had narrowly avoided a recession. There was a whole lot of fear that we were going to dip into a recession. Traditional stock markets were not performing well. People thought that that was going to continue. And to most people's surprise, we didn't see a crazy uptick in unemployment. We didn't see a major collapse in the economy. And we had actually a couple major blowups like Silicon Valley Bank, FTX, if we're thinking in the crypto space. And that wasn't quite enough to put us into the recession. So the reality was we had avoided a recession. And so that's the reality at a certain point. And that's going to move price. And all the people who were sidelined or waiting for lower or who capitulated their bags throughout the bear market are going to be scrambling for entries. Most of the time, they're going to be targeting levels that they don't end up getting, right? So let's just say here, you know, I want to buy the flip of this level here, this 18.3K level. Ooh, we love this breakout. I'll get in on the retest. Well, that retest doesn't happen, right? So you're probably not buying this. You're probably scared. You probably noticed that, okay, this little order block did not hold. I'm still waiting for my 18K bid, and then you stay sidelined. Okay, well then what happens? You get a major breakout. What's your next level to retest? Essentially this 25K level. Now you do end up getting your bid eventually. That's if you're patient enough and don't change your thesis or strategy over the course of 3 months, which, I mean, none of us can say that we can do that. So you probably changed your strategy at a certain point, and maybe you did finally stay patient, you got your bids, that's great. But let's say you stayed sidelined, you thought, no, this is just a bear market relief rally, I think we're going to kind of roll back over. And so you ignore this range, you're still sitting on your hands, and we get the breakout of $30,000, $31,000. And you think, okay, well, great, I'll play the retest. Price will pull back, it'll retest this level, I'll get my entry, and then that entry just doesn't come, right? And so all these people that get sidelined, the people usually with the least amount of money, are just playing this game of being 2 steps behind at all times. And so the end result is usually you end up buying way higher than you initially would have. So now you're working with a less than advantageous cost average, but chances are mentally you probably haven't readjusted your risk tolerance, right? So you're still eyeing these big time gains that are not quite as possible or as attainable. And so you probably leave profits on the table. Right? And so that's what tends to happen in these major upward swings as the narrative becomes overbaked, right? The narrative that stems from reality becomes priced in, becomes overbaked, and you have to flesh out the weak hand. So I'm trying to make 2 points, and I know that I'm kind of bouncing back and forth. The first point I'm trying to make is that reality and narrative sometimes are aligned, and sometimes they are not. And it's your job when there is something major going on in the market and everyone's talking about it on Twitter, or you're watching a bunch of YouTube videos about it, or whatever, you need to ask yourself, does the reality of the situation actually match the narrative here, or has it already been priced in? Is the knowledge already digested by the people with big amounts of money making these decisions on where to allocate their capital? Because, and we can even use, let me back up. That's the first point, narrative and reality. The second point is that there is a dynamic between the market participants that gets people stuck no matter what the market is doing, right? People are getting stuck on the way up, they're getting stuck on the way down. So I demonstrated on the way up, I'll demonstrate on the way down in just a second. We'll move over to this little stretch of time. Of course, this was all the ETF craze, right? We had the rumors resurfaced that there were going to be filings resubmitted. That was very optimistic. Then there was the rumors that there was going to be a much more positive attitude about it. That was optimistic. Then the actual approval, then the launch. The launch was successful. I mean, it was truthfully as good as it could have gone as far as getting a Bitcoin ETF and having it be successful and doing very well. But the problem is, I mean, this was what? From October of 23 to March of 24. If I can do quick math, that's a 5-month period of time. And you're meaning to tell me that in the 4th or 5th month, you're still talking about how the Bitcoin ETF is going to shoot price upward and bring about all this speculation? And it's like, well, that's been happening for 5 months, right? That was the reality when the rumors first surfaced and when the likelihood became pretty known, right? That was the reality. Now people can speculate. Now people are hopeful, right? But once you're 5 months in, that narrative is no longer reality. Like, we have the Bitcoin ETFs. It's a great thing. It's a really good long-term thing. But if we're thinking in terms of just a couple months of price action, it's worth a little bit of critical thought. So you get caught on the way up because you never get your bids. We'll show you how you get caught on the way down. I'm going to use the bear market for example. Now let's say it's January of 2022, and you're looking at this, and the first thing you probably did was you probably noticed this level of support around $40,000, and you probably bought it because, well, no, you actually didn't have bullish divergence. I thought you'd have bullish on the RSI, but you do have it a little bit on the MACD. But anyways, you see a level of support, you see some bullish divergence on the MACD, you place your entry, it looks fantastic, you're up a little bit, but you never really hit any sort of take profit, right? Let's say you're even just short-term trading this, and you're like, okay, I kind of want to get back to this order block here, find a range, I'll sell at resistance. Well, you never actually get that, and then your trade is probably, well, it's definitely stopped out if it's not liquidated. And then if you're just buying on spot, okay, your bag is down a bit, now you're going to have to average in. So that's a purchase. And you got to double down, right? Because I mean, I got to have a good entry, so I'm going to double down here. So at this point your cost average is somewhere in the middle. You get your pump back above this level, and now you're thinking, okay, great, I'm in a little bit of profit. We just had a huge, this was a fake out. I'm gonna play we're probably gonna get this retest of support. We'll continue higher. Then I can sell at the range, or now I'm targeting here, right? And then you just kind of keep chopping. Oh, well, I have to buy more. I gotta buy more as we're consolidating. And then finally, you do get another run, but you've built an even bigger bag here. You have a slightly better cost basis, and you've probably revised your targets because after 3 months of being this bearish, you just can't take it anymore. So you probably never exit this position, because if we're being honest, most people in crypto would not treat 27% as a good enough return, right? And this is also going to be very misleading. I even remember this myself. It was one of the few huge learning lessons for me as a trader, was getting faked out here thinking that we were resuming an uptrend. So all in all, you don't end up taking action. Your bag sits and it's a fake out. Okay, well, I got to buy support, right? You DCA and it's all underwater, right? And you just get stuck in that exact same cycle time and time again until eventually you capitulate, right? And then that's why most people are sitting on their hands, because they've just capitulated. They've got a sour taste in their mouth. They lost a bunch of money. They can only see the downside. I mean, it's just like being in a bull market when everything is doing so well and you can't possibly imagine, things not going well. It's that same psychological factor, just inverted. And so you get caught 2 steps behind, right? That's why it's very, very important to be highly objective, not only about the price action that's on your screen, but about the relationship that you have both with money and with cryptocurrencies. Because I promise you, I do not lose any sweat knowing that I don't have long-term bags in all but a couple of altcoins, right? I don't lose an ounce of sleep. I have a hoard of Bitcoin. I've got my ETH. I've got my Sol. I've got my stables. And from there, I'll draw it out this way. Let's say this is a pie chart of your digital assets. The reason that most people suck at risk management is because there's essentially 2 pie charts. And one is your total net asset, and the other is going to be your digital assets. All right? So let's say this is your crypto, and this is your cash. Right? Everything you have, and then all your digital assets. You need to be thinking in terms of 2 different things. Number 1, what percentage of your entire financial profile is allocated to this space as a whole? That includes everything. Your trading accounts, your Bitcoin holdings, your hardware wallets, right? How does that amount of money that you have and that level of exposure relate to your entire financial profile, and how do you feel about that, right? There's no particularly right or wrong answer, but you have to understand, if more than 20% of your financial profile is digital assets and that's too much for you, that's okay. Now you know that. And furthermore, within your digital asset profile, there needs to be a separation between what is worthy of a buy and hold and forget about approach and what is not. And the reality is, you've got Bitcoin. Most people would agree that Ethereum is this way. And I would say that Solana has definitely redeemed itself throughout this cycle, being the kind of retail chain of choice, outperforming Ethereum and Bitcoin tremendously, right? So it's very few, right? Other than that, what percentage of your digital assets is allocated to your trading accounts or to your spot bags, or, these miscellaneous altcoins or the darts that you're throwing? There's nothing wrong with saying that, okay, for the next 90 days or for the next 60 days, I'm not really going to worry about building this crazy spot bag. Manage your money. I mean, I throw a lot at you guys. I hope it's not too much, and I know I don't mean to be too blunt or tough, but I promise you, and I've been in this space for 7 years, 95 or more % of your success as a trader is going to boil down simply to how well you can manage your money. And that's everything that you do, right? Your bills, your rent, your utilities, the lifestyle that you live. I promise you, 9 times out of 10, the better trader is the one who knows how to manage their shit. Okay, real quick break. I know we should do your own research, but a bit more details on risk management may be given as well. Okay, love that. So I hope that for you guys, at least, any questions that you might have, I'm able to answer as best as I can. And as far as risk management, certainly what I just broke down is a huge part of it. And then there's definitely ways to manage risk when actually finding your individual trade setups. And I think that that's definitely a topic we should dedicate a good bit of time to as well. Another thing we can do as far as live sessions go, guys, at any point in time, I'm here every week. So just give me a ping in chat. Be like, yo, I'd love to have a session about this. And, chances are we could probably make it happen, or it could be a segment or a topic or whatever. Like, I want to learn how to do this thing. And we'll take 15 minutes, 20 minutes, and we'll do it. You guys, you see the memes of like, I feel nothing, people, or people who have been here for however long, and like the joke is that you feel nothing. I mean, it's true. I feel absolutely nothing looking at this, and that's how it should be. Yeah, hopium. I don't know. Don't get married to your bags. You only want to get married once in your life, and ideally that would be to another human. Yeah, don't marry your bags. That's a mistake I made a lot, especially in the beginning when I was a lot younger. If I had built a position, that altcoin needed to be the best one, and that confirmation bias is very real. So 12:30, let me make sure I'm staying on track with all of this. So we've kind of lost a range here. Sorry, let me back up real quick. So narrative, reality, all that good stuff. Finally, our last stretch was the election, right? The reality of the situation is that Donald Trump's victory was rather probable at this point, and it was very clear that it was going to be a crypto-friendly one. And once he won, of course, that confirmation opened that window for speculation. And funny enough, his inauguration date being the 20th marked our top. So perfect example of a narrative reality and no longer reality. Because at this point, I mean, people are wondering about a lot of other things. They're worried about inflation creeping back. They're worried about rate cutting slowing down. They're worried about all the political turmoil. And also there are some things that we want to see in respect to crypto, that we haven't gotten yet. Like we would love the strategic Bitcoin reserve news. We haven't gotten that yet. We're still anticipating it. And the point is, at this time, that anticipation is no longer enough, because that anticipation is what created this. So, anyways, get back to the update. I'm essentially just tracking this range at this point. I'd like to see if we end up getting down to this 85K. We don't really have to. Could be a similar situation as, most of 2024, where we were sticking in these major swing lows, and they were very capitulatory. But they didn't really take us too far out of the general range. So could be another one of those things. I'd watch for 85K, and I would watch for 90K, or potentially too, because you want to make sure that you've got your recent price action in mind, potentially too coming back up into this sort of area here around 95K. A couple of ranges to watch. All right, well oversold. What you're looking for next is the divergence. So you're going to want to see a nice little bump. You're going to see a lower low in price, and that's going to take you down and do something like this. Now, this isn't a crystal ball, right? But it's usually what you get. Right? You get a little bit of buy pressure, kind of tapers off, and you stick in that low. And that divergence is usually a high probability setup. Right, because that's all you're doing, is you're trying to find higher probabilities. So you see this little wick here, as well as potential, right? Let me make it very clear. You want to actually see the divergence happen. But one of my favorite setups is divergence at an area of interest. And so this would be bullish divergence occurring at what would be expected to be a level of support. That could be a nice little low risk play, something like that. I don't usually call signals. That's not really my thing. But that would be the idea. And you guys are going to notice that on most of these coins, it's really just going to be a matter of finding that key level and waiting for the bleed, waiting for the divergence, and taking those slow DCAs. If you're buying spot, taking those slow DCAs throughout the bleed And if you're playing leverage, just wait for that key level. And if it doesn't come, it doesn't come. That's fine. It doesn't mean, oh shit, I missed the trade. It means, okay, cool, I didn't have to take a bad trade because, you know, that if I would have taken the trade, it wasn't my setup. Like, just don't, right? If this is your plan, this is your plan. Don't wait for price to come back down to this wick and then be like, but I don't know, it might not get to my entry, so I'm going to go ahead and enter. And then it's like, well, why? That's not your setup. That's not your strategy. So, anyways, you're going to be looking for something like this. A little dead cat bounce, continued bleed, find that key level, create that divergence. That is where the opportunity is had. And I think we're very close to it. I legitimately do. Would it be possible to make the time for this live during work hours, even some weekends, and maybe give people more chance to know? Yeah, so and the biggest issue is simply that we're all just kind of in different parts of the globe, right? We got some folks in Europe, some folks in the States, different parts of Africa and Asia, so it is very difficult. We try to find the general range of time that works best for most people, and just based on some of our numbers, that does tend to be this kind of window from like 10 to 2 Eastern Standard. So we do our best. We do our best. But if we see that there's kind of an overwhelming percentage, then of course that's likely where we accommodate to. But nonetheless, guys, I think it's really just going to be as simple as that for my market update. I think we are entering the opportunity zone, most recent one. So altcoin season index sitting around that 33%. Still waiting to at least tag the 25%. This tends to be your best opportunity. And I remember even being in a live session several months ago before we had this little spike talking about, hey, pay attention to 75. Pay attention to when we're over this 75% mark, because that's usually your window of opportunity to take profit. And it only occurs every so often, right? I mean, you have March of 2019 and then not again until December of 2019, then August of 2020, kind of the spring, summer months of 21, right? These windows are not always going to be there. Same thing on the inverse. These windows of time are not always going to be there. So I think the opportunity is very close, and I think if you simply take that slow, patient DCA on the bleed, DCA the key levels, and for the love of God, just don't allocate more than you can afford. I think you'll be set up pretty nice. Yeah, Sol is pretty ugly, and I think beyond looking at the USD chart, which I will just kind of go ahead and do. So once again, you probably have people buying support here and buying support here. Oh yay, we're going to all-time highs, but nope. Cool, I'll buy the cloud. Maybe you listen to CryptoDave and you want to retest the cloud. Probably shouldn't do that. I don't know who would tell you to do that. But anyways, probably tested, probably bought support, right? And then you're caught up, you're flushed out, you don't get a chance to exit. But yeah, unfortunate. You lose this range here. I think this kind of becomes your resistance moving forward. This kind of 175, maybe up to $180 level. And I was thinking perhaps we could see a little bit of action at this 155 level, and we absolutely did not. So that's great. But I think you just keep your eyes again on the sort of $120 level. It's never too great when you see 1, 2, 3, 4, 5, 6 retests, and then you get that upward swing and a hard hammer down. It can make you uneasy. Right, the more times you visit and retest a level of support or resistance, and the more price action that exists around there, the easier it is to break, generally speaking. And the one silver lining, I think, to that point is that there has been a nice stretch of time in between these retests, whereas here they were fairly one after the other, right? And that is a lot more concerning than coming back many months later, right? So this could very well be support, at least for now. You would want to see this hold, ideally. This happens quite a lot, especially with altcoins, where you just have to flush each level and sort of rinse out the market. And if that doesn't hold, I think you're just, once again, your next level is this sort of $80 level, $85. Yeah, so I think this is your divergence opportunity, is that $120 level. You've already got Big move down into oversold territory. You're bouncing your way up. You probably fade this because there's really no... I mean, there's just no key level. Like, sure, you have some of these higher lows, but they didn't really mean anything previously. Like, that wasn't your range low, that wasn't your support. So you probably roll over, and then again, come down and tag that 120, get all of those levels swept. You're probably going to get something like this on the 2-hour frame, and it'd look pretty similar here on the 4-hour frame. You know, getting that movement up on the RSI, we can already see that the MACD is converging into a bullish histogram, potentially. You'd probably see the same thing with the MACD, just a brief, smaller blip of red. So yeah, I think that $120 level is a great level. And your risk tolerance and your time horizon for your trades needs to be based on your leverage. I think this is something, and this is my personal philosophy. I know that not every analyst approaches it the same way, and that's perfectly fine. But I do not understand why people don't think this way. But for me, my risk management is, I'll just break it down because somebody asked. Like, the first thing I've done is I've identified the key level, and I've identified the conditions for which I would want to actually take the trade, right? Bullish divergence at a level of support after a multi-month slide in the market that has wiped every single higher low. Yeah, I like that setup, right? So I found a setup that I like. I view it personally as high probability. Let's call it a $1,000 trading account, right? Let's say you have $1,000 in your trading account. You hush up and try to teach something. So for me, there is an order of operations that is going to determine how much margin I use, how much leverage I use, and all that good stuff. The first thing I want to do is I want to find the actual setup that I'm trying to trade. So for me, bullish divergence occurring at a level of support. Those are two very high probability factors in confluence. You've taken a major dump in the market over the course of several months, so you have that kind of time and exhaustion factor. I'm not going to flip over to the fear and greed index, but I'm sure we're only going lower in that regard. All right, so you've considered your factors, you've found your setup that you like. Okay, that's great. Now you want to find your invalidation. It's hard to find a perfect invalidation here because you do have some scam wicks. Let's say you wanted to be a bit conservative. You have a DCA here, so your entry, your cost basis is between the two. And let's just say if price goes below this wick, for the sake of argument, because I'm not going to waste too much time here. For the sake of argument, if price goes below this wick, that's my invalidation, right? For the sake of argument, if I see that, then my setup is no longer valid, and I don't want to be in that trade. I can take a little bit of downside. I'm cool with a little bit of a deviation, but at this point in time, with a bleed so severe, coming down to this level, with what we would anticipate to be bullish divergence coming through, if that's not going to be what does it, then fine. I'll take the loss. I don't want to be in that trade. Because why would you? Why would you want to be in that trade? So now I've determined where I personally believe the trade is going to be invalidated for me. Now, this is a 9.31% unleveraged move to the downside that would take you to your stop loss. So now you want to determine, of this $1,000 that is sitting in the entire account, what amount, what percent of it are you okay losing on one given trade? Because yes, you can think about, what do I stand to gain or lose on a given trade, but you have to contextualize it to your actual account, right? Because when you load up a trading account, the point is to grow it over time. So I've determined my invalidation. 9.31% is the unleveraged move that would take me to my stop loss. Let's say, for the sake of argument, and I'm gonna take a drink every time I've used that phrase. We could probably make like a CryptoDave drinking game for my live sessions. Yo, 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 that's 3 shots. Let's say that the max I want to lose on one trade is $50. And if I'm doing math appropriately, that's going to be 5% of our account. Right? Because 50 goes into 1,000 20 times. Right? This is going to be 5% of our account. And again, I'm just trying to use round, even, polished numbers to make it easy to understand. And these are all examples. But I don't want to lose more than $50 on this trade. Okay, cool. That is determined by your own personal opinion, your own personal tolerance, and how you feel. No one else gets to decide that for you. Let's say it's $50. And we're working with a 9.31% stop loss. Essentially, what position size would lose you $50 on a 9.3% unleveraged move? Right? So if $100 loses you 9.3%, that's your position size. So I'll do that again. So you are okay to lose $50, and a 9.3% loss on $100 is going to be the $9.31, right? So $50, 9.3%. So you can do a standard unleveraged size being $100, because you want to liken 1-to-1 the percentage with the loss. There you go. That's your position size. Now, determining leverage is essentially going to be based on your time horizon. And if I need to slow down, if I need to re-clarify or answer any questions, please let me know. There's no dumb questions. And I hope that it makes sense how we got here, right? We found our setup. We found our invalidation. We've made a personal decision to say that this is how much we are comfortable losing on this size account in one given trade. And it's just an example. And so in order to lose $50 on one trade and no more than $50 with this setup, because your invalidation is a 9.3% unleveraged move, the position size cannot be any larger than 537, right? And if you consider a $100 position, 9.3% is going to be $9.3. And if the loss can be $50 divided by what the loss would be if there was no leverage, that is going to give you whatever ratio, we'll call it X. And then X times 100 is going to give you position size. So this way you know that if the trade goes south and that stop loss gets hit, then that's fine, okay? You lost the money that you were comfortable losing. You didn't lose any more than that. You didn't take any unnecessary risk. You didn't throw a ton of leverage on the trade and make it so sensitive to all of these movements, right? You stuck to the plan. You took a high probability setup, and sometimes it might not go in your direction. But I mean, how protected are you in a situation like this? X is roughly 5. Yeah, it's like 5.3. Something like that. I think it was like 5.37. But regardless, it'll give you that number that you multiply by 100. Cryptic's checking my math. Cool. So that's going to give you your position size. You know that you can do a $537 position. And from there, leverage should also be based on a couple of factors. I think the first factor is the first factor is time horizon, right? How much time are you willing to put into this trade? How long are you willing to sit with this position and revisit your thesis and manage the position, right? So how long? And then also, how many trades do you like to have open at one time? For me, myself, I am not an excessive trader. I don't tend to have several trades open at one time. But if you are someone that does have multiple trades going at one time, you probably need a little bit more leverage, so that way you can have more margin to work with for your different trades. But if you're say one trade a week type and you have a pretty decent time horizon, then you can always reduce the leverage. It gives you a bit more wiggle room to work with as far as stop losses and DCAs and targets and all that stuff, right? And so let's say for me, 10x is the most I'm willing to put on a trade. So if I'm willing to do 10x, then that means that my time horizon for the trade needs to be shorter, and my take profit levels ideally are probably not going to be these major range highs that you would mark on the high time frames, right? If I'm taking the order here, my target at best is probably whatever this little relief rally gets to, right? So if we get a little push up to here before we fall, that's probably my max TP. Because why would you, I mean, think about it this way. It took months to get back to an all-time high. If you took a 10x leverage, he talked myself into oblivion. But yeah, I mean, even if your take profit would have been here, right? Previous range, that's your resistance. You scoop the lows, you got 10x leverage, and you're trying to swing it. Like, you just don't get that, right? You don't get it here. You don't get it here. You don't get it here, right? Months. You got 10x leverage, 10 times your margin moving the needle. Why in the world would you subject yourself to that, right? So that's why I try to stress time horizon. Be realistic about how long this trade is going to last, how long it would usually take, or at least a ballpark of what it would take to do something, right? If I've got my entry and I'm just trying to tag a simple rebound to this level, that can take a couple of days, right? Because we know it. We are able to look at the chart and know that, okay, a little consolidation, couple of days, okay, we hit a target, right? You could do a 10x leverage here because this is the 4-hour time frame, so this is what, probably 3 or 4 days total. And you had the right target. And now I also want to say that hindsight is 20/20. I'm not the best trader, and I lose trades, and I make sometimes the wrong call, and that's what it is. But there are ways to shield yourself from your own arrogance and stupidity sometimes. All right, so you determine your leverage. Leverage will determine your margin, obviously. Cryptic, thank you, Cryptic, it is 537, so your margin would be 53.7. You'd have 10x leverage, and you're trading it to a much more manageable target, right? Because now you have the odds in your favor. So at this point, there is at least a better chance than not that you can get some, if not all, of this 24% unleveraged move before you lose your money. And if you don't, you don't. Like, that's just what it is. If you take high probability setups every single time, the math will usually do the job for you. 500x leverage, yeah. Okay. Yeah, I don't know. I don't get me wrong. I like to degen every now and again. You know, I'll gamble on sports and stuff like that. But yeah, I personally can't get behind anything that's greater than 10x. That's kind of just that's just my comfort level. But it's important to know that some people, and we have analysts in this server who trade on much higher leverage than that, and they're killing it. You know, and so. I guess I don't have room to talk, but the point I'm trying to make is if you know something about yourself, especially if it's a psychological component, don't ignore it, right? If you want to say, oh, I want to do the same thing that CryptoDave does, then do this. Do a process that works for you. That's what CryptoDave does, is a process that works for him. I want to get some chart requests. I know that we had some chart requests. We had OP USDT that I saw in the chat. I don't know if you're still there, but we'll try. Layer 2s just look terrible. I mean, God, it's so sad. Because for a while there, I was very big on layer 2s, especially like optimism. I was very optimistic, and it just has not really panned out. We'll see. I think that there might be more room for Ethereum in the next leg to kind of take the focus than Solana. So I think you might have your chance with some of these layer 2 rotations, but yeah, I don't like it. Like, I wish, you know, you'd ideally hold some of these levels here, and you're not really. You're more so getting wicks down to this region here, sort of 80-cent territory. So again, it's much of that same thing. When you have a major capitulation like this, you've broken a range low, right? You've broken where you would perhaps suspect to have support. You've done so in a very capitulatory fashion. You've tagged a new range low, and you usually, and I've demonstrated this before, you'll create one of these, a big old wick that shows that there is some liquidity sitting at a certain level and people eager to buy the discount. Usually what happens is you just reestablish previous support as newfound resistance, and then you have daily candles that will take you down to this level. And the daily candles tends to be what scares people the most, because people like to see wicks, wicks to the downside, right? Because it shows that that buying pressure was there. And generally speaking, that's correct, right? I mean, we can even see it here. This was actually the bottom for quite some time on a long wick, right? Even here for a little bit of time, right? Long wicks are great, but oftentimes, and especially when things are pretty bearish and you have a lot of folks that don't want it to be that way, so they don't play it that way, you'll get actual candle bodies that come down and fill the wick. And all the people who love wicks freak out at all the candle bodies coming down, that either they're scared of this level or they switch their thesis and they go short or whatever it may be. I don't know. They view this whole range here as the level to break and the daily close below scares them, whatever it may be. But the point is, optimism, that's your resistance here at $1.20. That's going to be tough to crack. I would wait for some candles to bleed down towards this 80-cent level. We'll go down to the daily. All right, so you already got a little bit of that oversold territory. Major bearish engulfing. I mean, yeah, that's just terrible. Bearish engulfing, you've completely consumed the bodies of the past 5 days before this candle. You close below your previous closes. I mean, yeah, that's disgusting. But it probably gives you an opportunity if you're patient. Right? You see that price bleed, you see that RSI come down and set in that higher low. Like, I'll do any chart request you guys want, but it's going to just kind of end up being this. Kind of every time. Which I'm actually stoked for. I've told you guys for weeks I've been keeping most of my cash on the sideline, and this is why. This is why, because you see the objective breakdowns in the trend, you understand the relationship between narrative and reality, and you don't have that psychological component where you're just married to your bags and you're like, oh well, if they're not doing good, I can't leave them. It's like, well, yeah, you can. They're there to make you money. If they're not, then they're gone. It's that simple. So the invalidation in this example is a 9.3% unleveraged move. So if that's how much you can lose, you got 5.3, you get a max position size. So it's basically, that's it. You just want to determine what is the max position size, and then from there, the time horizon is going to allow you to determine your leverage. Just terrible. Anything that has an airdrop, I mean, it's just terrible. Because most of the time, the people who are really excited for the airdrop are not the ones who are eligible for it or eligible for, like, an amount that's going to matter. And then you're buying it. I mean, once you see people are getting their airdrops, a token's pumped, and it's getting all these different listings, just stay away from it. That is instant liquidity. If you farmed a platform and it costs you $200 in Ethereum or $200 in Sol to farm a platform or whatever it is, and you essentially get paid 3-4 times that in your airdrop, if it's an actual good airdrop and the work you have put in to be eligible and that amount that you have received far outweighs it, I don't think there is a single scenario where I'm not dumping that. At least some of it, right? Like, if it was a really, really good coin and I was really in love with it, I'd probably keep some, but I'd at least get my money back. And that's just the way it goes. It was the same thing with hype. Last week I remember talking to you guys about it, where you get all the listings one after the other, everyone loves it, everyone talks about it, but all the people who actually move the needle are just taking their money and bouncing. Now, I'm not saying that Hyperliquid is not going to have longevity in the game or won't perform well over time, but if we're thinking just in terms of short-term movement, and if their time horizon is several weeks or a couple months, then yeah, that's kind of the mentality. And so what was I just looking at? So yeah, it's really just much of the same, and then people want to find their entries, right? They want to buy support, and then that's not enough for them, so they get stopped out. Oh, but of course, this wick right here. Nope. No exits. Yeah, I don't really know what to tell you guys. I mean, I just don't know what Pingu really stands to offer. I really don't. Maybe somebody can enlighten me on that, because I'm Certainly not trying to be harsh, but and maybe you get, I mean, there's a trade here somewhere, but it's just ugly. You do have bullish divergence. You've already kind of caught the bounce from it, though. And you're kind of coming back up here. Maybe you get up to this range, right? But you've already missed the bull div, right? And so it's kind of tough to get in here. And I don't know. I mean, this whole thing just kind of feels like a constant, like you're desperate for the entry. It finally looks like you could catch it, and then it just doesn't. So at some point that stops. I recognize that. And the longer and longer it bleeds, the higher, the more favorable the risk profile. But me personally, I don't really have any interest in Pingu. And Jupiter, I actually think looks pretty nice. Now let's be objective, because if we don't continue holding this range here between essentially between 60 and 70 cents, you do very much open up the window of opportunity for complete meltdown. So let's not be naive, but you've got that level of support that has historically been holding. You do have bullish divergence already here, and granted it's not coming in any oversold territory, but it's still a divergence nonetheless. It came at a level of support. Again, you've missed your perfect opportune entry, but if you're accumulating on spot, or maybe you're doing it with very low leverage, I have personally bought in this range over the past couple days, so I will just put that out there. But of course, I allocate what I feel I can afford to do so, and I don't go all in at once. But I like Jupiter. I think, more fresh, more native to this cycle than previous cycles. It's a newer coin. Solana has performed extremely well. And before I go to the next chart request, I do just want to give you guys a bit of a warning for as far as Solana goes. I don't like the monthly time frame, the weekly time frame here. This is very, very similar to ETH BTC from 2021. Right? You essentially set a clear distribution range, an area where price is simply unable to crack, unable to close above. And of course, this is just a ratio, but we need to understand that these ratios, a lot of people use them. Right? You've spent essentially a year, beyond a year, failing to flip this level, while simultaneously being the best performing major crypto asset and having one of the most successful ecosystems over the course of this cycle. Right? But you create this distribution, you get tons of bearish divergence. I mean, just tons. Actually, let me not exaggerate. You don't get tons of divergence, but you get a very clear, a very sharp divergence. You guys can tell my brain is already starting to shut down. Clear divergence there. Let me make it a little prettier. And then you just continue in this distribution. You're unable to even replicate this high. You've broken down below this range. It's really just not a good look. It's really not a good look. And I'm not saying that Sol isn't going to continue to have success and perform well. I'm just saying that I think the period of time where Sol is leading the charge wholeheartedly, I think is past us. And that's why I think we're getting more so into an Ethereum-oriented stage of the market. Because you guys have noticed you probably lost money in crypto because you have the same mentality that was born from 2017 and 2021, where every altcoin is going to do great as long as Bitcoin is doing well. And that's just not the case anymore. We have a standard. We know that institutions care about crypto. We know that governments care about crypto, and that they only want the real world value. So that's that. You have a new standard. It's not going to be everything all at once. So I think our Sol, and I could stand completely corrected. I mean, we could just hit one of these, and I could look like an absolute jackass. That's perfectly fine. I don't mind doing that. But clear bearish divergence, insanely strong on the weekly time frame. You're unable to get past a previous level of resistance from the last bear market, and you set a distribution for over a year. lose your level of support, it's just not a good look. And I hate to lean so hard on the RSI, but these things have a tendency to bottom pretty hard. And I want to put this in perspective with ETH BTC. What do you know? It's almost as if we're looking at the exact same chart. Almost. So again, where are we at? Previous level from the cycle that preceded it. Let me get that's the area of interest. Weekly time frame. Yep. So here we go. There's your divergence. Very clear, very easy to spot, and an inability to break above and close beyond historical support. What ensues? Let's see, May of 2021, essentially through to the range being lost. Over a year, well over a year of distribution. Your anticipated range low does not hold successfully. And here you are. You find yourself in literally a multi-year downward spiral against Bitcoin. And you guys know that Ethereum has not, Ethereum has been getting clowned for quite some time now for being an underperformer. But I don't know. I think Ethereum will probably lead the next charge. That's currently my thesis. But very important to note, I'm going to be paying attention a lot to the ETH ecosystem. I'm going to be paying attention a lot to the sort of quote-unquote made in USA narrative. Plenty of others.